What's going on, people? It's GBP Baby. It's currently 9:08 p.m. on the 4th of May 2023, and today we're looking at GBP as per usual. This is today's price action. Yesterday we saw a price trade higher, taking out these highs with FOMC, and today we've seen a lot of consolidation, and we've traded closer towards this level which I had marked out on the weekly. This swing high, we traded towards that. Generally speaking, I am still expecting us to trade above here. When price does this, like this is again typical price action, as in us trading to the high and turning around. Like a lot of retail is going to think that, see this as resistance, so there's going to be a lot of sellers up here, so there's going to be a lot of stops and short people trying to short the market, because we haven't even traded to the high yet. So, and it looks like, again, to a retailer perspective, that there's reason for it to go lower. This swing low we made here, we took out liquidity here during 8 AM, so as New York was starting, and then we traded higher. Realistically, I don't want to see us trade back below here, because this sweep on liquidity, that's enough sell side for me, and the buy side, which I've been targeting for a while now, is these highs and potentially these highs, but I'm not gonna. Let's aim for this first. But yeah, so you can see we've just literally just traded back into this order block. It's even an order block. I wouldn't even class this as an order block because we haven't traded through it yet. But again, you can see these very difficult market conditions in regards to how price has been, flipping back and forth today. But you'll recognize that we are still within a quite tight range, so because of that I am expecting expansion, because after consolidation we expect expansion. Yeah, so the reason I don't want to see price come back below here, down below here, this is all boils down to understanding the algorithm and how it's supposed to deliver. Like, let's go to the 4 hour. This fair value gap, as we broke away from this and came back down here and left it, price came again and tried to trade to it, but it didn't even get down there. I'm seeing this as like a bullish, this is bullish behavior is basically what I'm saying. I see this as a breakaway gap or a halfway gap. I'm not actually sure of the correct name, but what I'm saying is that I don't think we're finished on buy side yet. So as far as I'm concerned, it shouldn't be looking for sell side, and that this would be deemed as sell side liquidity, this low here. So I'm not expecting price to come down to that, because we don't need that sell side right now. I hope I'm making sense right now. This is clearly an order block, these two candles, so we can use that as reference. So if we mark out the 50% level of this order block, $714, we're literally trading to that right now, so I don't really want to talk too much on it. So there's obviously a fair value gap here, but again, if we look at price action in more detail, let's just start from the beginning of the day and see what happens. So we had our opening, and then as London started, we fell lower and started trading back into this price action from yesterday, which was FOMC, I believe, around this time. Anyway, we're remaining within this range. So we trade. So let's have a look with a Fibonacci. It'll make a lot more sense. Right, let's pull out there and work our way forward. So you'll see that price, we were trading in this range, and as London started, we traded down below 50%. That means we're going into discount. We hit optimal entry, and then what happened? Of course, we traded higher. We had a return back below the levels, taking out sell side, again remaining within optimal entry, and then price returned higher again, and has failed to trade any higher than this. The fact it failed to trade higher than this gives me reason to suspect that it's going to try and do that tomorrow. But again, it's these are clearly difficult market conditions in regards to how consolidated it is. But considering FOMC was literally yesterday, again, this is not surprising price action in regards to the difficulty. But it's just, I think the most important thing I want to make clear is a note is that we've taken out sell side liquidity here. Sell side is good, and overall our long-term bias is bullish. So I don't want to see price come in any lower than these levels, to be honest. Let's look at where we are on Sundays from Sunday's opening. Bear with me. I should have it marked out already, really. There. So this is Sunday's opening. We can see again, this is what we're consolidating over, and this is what I mean with the importance of the Sunday opening being so relevant. We traded above it, below it, above it, below it, above it, and I do have reason to believe that it was trade to it one more time and then move higher. The fact we traded above it so aggressively here, came down and left it, this is again bullish, a bullish stance for us to give us reason to run into these highs and these levels here. And also you'll notice that the Sunday opening also hits the 50% level of this candle's wick on the hourly, so we'll mark that as a potential target for a low. 1.2566. Oh gosh, what am I doing? 1.2566. I'm gonna make that black and make it a lot, make it thinner. Also, that clearly lines up with a bullish order block. So again, price returning to that would make sense. And if we do get a turnaround here at this level, which we marked out from the 4-hour order block, then I can imagine this low getting taken in either Asia or in London tomorrow. Again, it's engineering its own liquidity, so I think one of the most important things again is recognizing what's engineered liquidity and what is seen as more long-term liquidity. So like, for example here, this when London made this low, when London session made this low and we struggled to get higher, trade above it here, we could then expect that this was engineered so that there's reason for us to trade into higher prices later on, although it didn't do it today again, like I said. So generally speaking, it's difficult market conditions. I don't really want to say too much, but again, I think right now it's just a good idea to keep an eye on the Sunday opening price, and if we do trade back below it, I would see that as a discount. But you can even look at the range that we're currently trading in, and you can see that we've just traded below a discount. So with that bearing in mind, like any buying that's going to be going on, we want to be buying below here, which makes sense because we've got this fair value gap and obviously the order block on the lower time frame, which it looks like price might be going to now, but I don't want to say too much. We're not doing live trading just yet. And also, what time is it? It's 4:50 in New York. Yeah. So yeah, overall, there's not much to say purely because of how consolidated it was. I did buy below open. As soon as London opened, it traded below open price basically. So I did trade my demo account. I can't remember where my exact entries were, but I bought, and then I didn't actually release my stops until we traded like above these highs, and then I wanted to get out as soon as possible because of how consolidated the day was. So today was a very bad day to trade, but again, I can imagine it's because of FOMC being yesterday. ICT did tweet saying that trading on Thursday after FOMC is, like stupidly risky, and I can see why, because this kind of price action is not nice at all. Like, it's not easy to see what's going on, it's not very clear, and it would drive anyone insane. But if you're going to go in the charts and you're going to have a look, I advise you to take a look at how price traded below this low, took out sell side, and how these levels, any lower than that seems to be protected. For example, this traded into this order block. See, so like there's no we've already returned to this order block, which means that this range from here to here, this is traded through. So realistically, we shouldn't really need to. We don't need, if we are bullish, we should at least trade below that. So now this acts as support, which is why around here as well, I'm expecting us to hover around this Sunday level still, maybe dip below it one more time and then trade higher. But yeah, is there much more for me to say? Probably not. I hope I made sense in this video though. It is very complicated right now. We'll see what happens tomorrow. I do still have my bullish stance. We have got some beautiful like relative equal highs here and here with a lot of stops. And this buy side up here, which might be worth noting, this is a daily buy side. We might just trade through that. But I was saying to myself, if we do go to that, I want to see it trade aggressively towards it. I don't want it to just, flutter its way up there. But I don't want to talk about those levels right now because again, we are still stuck in this range. But yeah, that's pretty much it for now. One more time, again, if I was you, if you want to be in the charts but don't want to do anything, go look at the range we're in and just look at how consolidated it is and what the price is trying to do. Like, I've really got my eyes on this order block right now. But again, it's 4:15 p.m, so I'm not expecting much. But like, these are the things that you need to be paying attention to really, and just looking for signs of support. That's the main thing. As long as price action supporting your bullish bias, there's no reason we should be thinking any other. Until proven otherwise, we are bullish is basically what I'm saying. And that should be your bias until we see a complete break in structure, which we clearly have not witnessed yet. But yeah, that's pretty much all from me. Thank you for watching. This has been GBP Baby, and I'll catch you tomorrow.